Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Tuesday, and we're now at the 4th of February. I feel like it's so much later than that already, but the 4th of February, 2025, 6:30 p.m. Central Time. As usual, President Trump is offering all that he can in the way of show and tell. And today it was another day where he's signing away, if you will, different orders. Iran was on the table. He put back on and made it rough again for them. But at the same time, he said he wished he didn't have to sign this. He can't wait to meet with the president, blah, blah, blah. It is the old Teddy Roosevelt. Speak softly. I really don't want to do this, but carry the big stick as he's signing the bill. Then I'm watching him talk about Israel as Netanyahu came in later in the afternoon. And this is the first, I think, head of state that has visited the White House since he's taken back the presidency. And to make a long story short, they're trying to figure out ways to rebuild Gaza. Have you looked at Gaza? And this part the president is right on. It's not habitable. At the same time, none of the surrounding Arab nations that the president's asking to take in refugees are willing to do so. So what do you do for these people? That becomes the big question. And literally, it's 6:30. I think at 6:20, my bells are going off here as the president says the U.S. will redevelop Gaza. No, we won't. We might be part of something, but this isn't a shopping mall. This is going to require the whole region, billions upon billions of dollars to get it done. But please explain to me, what do you do with the people now? Do they just live in tents for 10 years? I mean, you can't rebuild what was taken down 1, 2, 3. I don't care what you throw at it in money, it isn't going to happen. And that becomes the biggest issue to me that I can think of immediately. The second one, what a crime. Nobody's willing to take these people in, all right? I mean, here you go, you hear all these things, but hey, we'll give you all the money you need, but we're not going to take you in. Okay. When I look at other things in the market, maybe we should go right off the bat to the Mortgage Bankers Association. They're going to come out with their update at 6. You're getting the ADP number. Look for about 150,000. That's the estimate. It was 122 in the prior report. You're going to get the December trade balance probably approaching 100, the big number. Yeah. It's an increase you're going to see again. And the API stocks, well, we'll see what happens. EIA showed big increases. So I don't know what you do with that, but they're continuing to jump. Now, the stock market tonight's down a bit, and that's because, the market's priced to perfection, that company upon company is just going to keep spending money on AI, and it's a never-ending process. I hope you don't get caught into that game. And what happens is you'll get corrections along the way because you won't see the earnings exactly as they should be. Doesn't mean they're not stellar, but things are priced for perfection, and you got to be careful with that. The dollar got hit today, and most currencies put on a rally against the dollar. I didn't think it was going up that high in some of the markets, but it did. So the correction is underway there. And other than the metals, this has been a hard market to catch a straight move up on. Gold has been one of the best performers recently. If we look at Bitcoin, it has been everywhere. It's trading between 97, 98,000 up to 103. It's a $5,000 swing back and forth continually. We're waiting to see what the bonds and notes want to do. They probably want to get the ADP numbers out, see what those are going to look like, the everything. And why? Because we saw the JOLTS number come out today, and we saw that fell by 400,000 jobs. However, as for labor turnover, that isn't going on. People are finding it harder to get jobs. They don't want to give them up in certain areas. They realize they're not going to get them right away. A whole stability is setting into this market that's different. When we look at the S&P, you still haven't been able to correct back to the 18-day average of closes, which would be 59, 71, 75 when you round it. When you look at what we're doing here, you can clearly see the lower highs, lower lows on the chart, and the swing line even shows it to you better. So you've got the trend down, but when you look to see what the bias is, the market's fighting for bias right against the 18-day average now. 2 days ago, you broke into the 100-day average and popped right back. What is that? I call that neutral. You've got the trend down off the swing line, but you're staying over the 18-day average, so the bias is up. Market's just looking to see what it can do. Here's what I think it is. I think it's out of breath. And I think it's just going, what do I do right here? Now, the breadth of the market is what's interesting, because I don't want to see it all, the AI stocks. I want to see other things carry the market along the way, and I think many traders are looking at that. Momentum is dripping down as price is also dripping with it. I think that's the right phrase to use. The pattern right now is not a trend. You have lower highs but higher lows. So you're taking the market, like we talked yesterday, could start doing one of those sideways action jobs, and that's what I think it is. You've got a lot to consolidate in here. It feels like, President Trump has been there forever, and it's only 2 weeks. Remember that. What has gone on? How many bills have been signed? How many signings do we see on TV every single day, and how much with the negotiations? I mean, this is not over by a long shot, so buckle in. In the micro mini Dow, you have the higher high, lower low. Again, you fell back 48 hours ago, hit the 18-day average bounce, but again, no trend. And here's something that's happening. You're losing the bullishness in the market. Therefore, and let's go back just to the close today. When the market finished, it was 80.86. Intra-evening, you're losing the embedded reading. It matters what it does on the close. If it's lost, then these will be the goals that I have in the market to pull back here. There is nothing screaming at me right now, hey, step in to be buyers in that market that I can see. And the Russell, as you get your bounces, it gets curtailed. And we talked about this yesterday at that 100-day average to the 18. So this is an area that if the market rolls back down and closes under the 18, I think the traders get more and more secure in attempting short sales. I didn't say it would grab hold. It hasn't yet, but the market seems to be wanting to do that. In the 10-year notes, you have been caught, and it seems like forever, between the 18-day average of closes in red to the upper Bollinger Band, and just back and forth in an overbought condition in the market. When we step to the 2-year notes, you can see how you peaked out at the upper band. Again, right back to these 18-day average, momentum trying to point down. You need to close under 102.23 if you're going to get bearish the market. Otherwise, I think it's just a churn, and that's what the market is offering. In the dollar index, you can see how much the market gave up. The market had a good day up yesterday, 66 points, and down 105 today. That means that you've made something of a peak in the market up here. I'd be very cautious. It looks like a double top against the 110 zone, 109.80 area, and you could fall back even further in this market. Be cautious right here. In the euro, if the market can stay under the 18-day average, again, you keep the pattern of lower highs, lower lows. I'm still in the bear camp on that because I believe that all that they're going to keep doing in the Eurozone, the ECB, they've got to keep cutting rates to spur their economies on, and I think that's going to be the game. A lot of people are questioning what's going to happen in the British pound. As I've mentioned each night to you, I think it's the 6th that we get their decision as to what they want to do. You have an overbought market, void of a trend. You heard me, void of a trend right now. You clearly have higher highs, lower lows. Once the market crept back over the 18-day average, it's been trying to stay over it. So that big break into the 121 level, well, the market's recouped about 3 cents of it. Not a huge amount. I don't look for it to easily get over the 126 area in any manner, but it could have a little more pop still to it. Then we get to Bitcoin, which is bearish right now. lower highs, lower lows, trend down, bias down. Again, I can make an argument for the 95,600, 700 level, the lower Bollinger Band, and I see resistance here. Even if the market went up and through this high, you'd have a lower low and a higher high pattern currently. Now, could it change that if you had an outside day develop by taking out the lows of Tuesday and then reversing up? Yes. But, trying to find outside days and calling them is a very difficult process. Next, we get into the energies, which have all come down into key support now, close to the 200-day average of closes. If you can get another thrust down, which I'm not thinking is easy since you're already in oversold territory, then the 7,500 level becomes interesting. You did that in WTI today. Look at where the market went, look at the Bollinger Band, and how much you spun away. Again, the first time you hit that is the key. Traders, I believe, cover shorts there. System upon system uses something, if not the Bollinger Band, to try to figure out areas where there's high probability that the market will bounce away from, if it's falling, or drop away from if you're getting a rally. And to me, the Bollinger Band just an absolute natural. In the heating oil market, you can see how the market got oversold. Now it's just sort of drifting here. The rallies are being curtailed at the 18-day average. You don't have a tradable market. You have the trend up, the bias down, and the battlegrounds, the 18-day average of closes. And in natural gas, you've been fighting your battle at the 200-day average up to the 18-day average and back and forth. Still no play that I can see out of it. In fact, so many of these markets are difficult right here. They're not saying, hey, come on in, join my party and trade with me. As you can see, you try the breaks, but as the day or the evening goes on, either one, the market finds the buyers in these markets as people are still enamored with the long side. If this sounds of interest to you, you should see what I write during the day. What I do is on Monday through Thursday, I write 2 market letters a day. The big ones in the morning, where I cover an awful lot of detail, a lighter version of it in the evening, where I'm telling you what I'm expecting for tomorrow. But if we get into what we're doing now, they can sometimes be quite large. It's just the way it is. But then I back it up with trade ideas with specific entry, exit, stop orders, how to come out. Are they momentum trades? What are they at? And they cover the whole spectrum of the market. So while you see me here talking, I do cover in great detail the grain markets, the meat markets, all the soft markets. They're all there that I watch. And even charts, part of my full research package, you get the morning videos, any special videos that I have, free access to my special reports. Other people pay me. Every time I put these out, you end up paying for those if you're not with me on this. Go to iraepstein.com research. It's all right there for you. Move your cursor to the top here. There'll be an icon. You can get to it that way as well. And I'll catch up with everybody tomorrow. You have a great evening. See you in the morning.